Hello everyone, K Kim here from Traders Club. Thank you very much for tuning in. Today I am going to skip everything today, okay? And I'm only going to talk about Apple. And I want to make sure I don't go too long, but since I won't be talking about anything else but Apple, hopefully that it would be short enough for you guys. But anyways, we are currently looking at Apple here, and first of all, what I wanted you to see is I want to go to weekly chart, because for us being the week ending today, so weekly chart is going to be very important. And so what we have here is, first of all, I want you to take a look at, closer look at this blue line. That blue line, what that is 10 EMA on the weekly chart. So we hit that. We poke above that, we try to close above that, fail, we went to 10, fail, we went to 10, didn't work out. We also got close to 10, but just didn't have enough fuel to even get up there. We got to 10, we trying to close above 10 and failed. So what I'm looking at is on this weekly chart, first of all, is that 10 EMA has been the devil for Apple, right? Has been the bull killer, right? Every time it gets that 10 EMA, bulls get shot down, right? And that's what's been happening ever since we closed below 10 EMA. Ever since we went below 10, that was it. It just, every time you're trying to get up, plus these upper wick there, that's what it represents. Bulls tried it and got shot down. So then when we look at weekly chart, it was never able to close above that level. And so that was what I was looking at on the weekly chart. And also we're looking at here 100 SMA and 20 EMA on this weekly chart crossing, and that also suggests that they're continue to have this bearish sentiment rolling in. Also, if you look at these flags that we've been having on this weekly chart, and it seems like that's what is happening now, right? It happened here, it happened there, it happened here, it happened here, right? I mean, these flags are basically, the stock goes up, but then the volume decreases. What happens is then volume did not confirm the trend, because then we don't have enough strength and fuel to push higher, so then these things fail, right? So, and most times what the bear flag really is, after bearish run like this, bears like to rest. When bears rest, bulls come in, buyers come in and think that this is the bottom, and then they try to get in, and then after full rest, bears come and attack again. And that's what happens every time a full rest. We get that humongous bearish candle there. You see that one. We did have 3 weeks of a bearish candle there, but after a full rest, we were able to calm it down. And here today, we also have another bearish candle. Looks like a tweezer top at that 20 EMA. It's not completely engulfing, but engulfing / tweezer top there, and which is definitely bearish reversal signal, just kind of like here. And so looking at this weekly chart, looks like the bear flag is playing out. And if just looking at this weekly chart, if this level doesn't hold, which is 420, which I've been anticipating that 420 level ever since about 420 level, 520 level. That's when I wrote an article called, why I believe Apple's going to 360. And I said 420, that's where we might find some, buyers who are willing to get in. And we definitely did that for 1 to 3 weeks, but, this week just wasn't able to hold. Let's go to daily and what we can find here. When we look at daily here, guys, I just cannot ignore the fact that I've been shouting out, watch 50, watch 50, watch 50, watch 50, right? 50 is there, and when 50 is there, 50 go to work. And when 50 goes to work, it seems like he goes to work. I mean, he shoots him down. He has been the bull killer. Every time the bull's trying to get up there, he comes out with the automatic weapons, and he just shoot him down every single time. And this is one thing about me, is that I cannot trade with just feelings and guesses, right? I cannot just say that it's gonna go higher, because basis on what, right? I mean, with me, what I can work with is probabilities and chances, right? Because I'm not here to make one trade that will make me, 1,000%, and then I'm out of this game. I'm here to do this for the rest of my life, and I'm here to make money on a consistent, persistent basis, which means I want a consistent profit month in, month out, year in, year out. So then what do I have to look for? We have to look for the patterns that are consistent, right? That has high probabilities of playing out. So then if you don't know anything about technical analysis and all you've learned is these moving averages, right? And if you, every time it touches 50 EMA, if you went short, where you have to make living off of it. Yeah, I mean, for this whole, how many, it's ever since October till now, till April, about what? 6 months, you were able to have monthly paycheck coming in just trading by looking at that. I mean, that's exactly what I had been doing. I had more supporting evidences, looking at different indications, oscillators, and chart patterns, and sentiments, and candles, and I had all of that, to support my argument. But when you look at 50 EMA, 50 here, last 3 times we hit 50, and it tanked. It tanked, right? So then you pay attention, right? You pay attention. If I come to your house every, I don't know, 50th day, and I just smack you, and then I go home. Next 50th, I come home, come to your house, and I smack you, and I go home. I do it again on 3rd time. At least the 4th time, you're gonna remember that, and before I come, you're gonna make sure that you don't let me into your house, because you remember last 3 times when the 50th day when K came, he smacked me. So this time I'm not gonna let that happen. He could have just said, you know what? I'm sure this time around that when he comes on 50th day, he might be nice. He might be generous. He might not hit me or kick. You know what I mean? But what are the chances? Because it happened every single time. Last 3 times it occurred, it happened. So then this time, what are the chances that it wasn't going to happen? That chance was actually, I mean, there was possibility that this could continue higher. There was, but then what are the chances of that compared to that it could rolled over at 50, right? So that's what I was talking about. That's what I was blogging about. That's what I was tweeting about. That's what I was telling everybody about. Watch that 50, watch that 50. And so that's exactly what we got. So let's look at actually closely here. What I saw though at 50, what I want you guys to look at is this 65-minute chart. Actually, we have to go to MACD so I can show you. 65 minutes. And this was about this day here. So before the 25th, before that gap down. So this was happening. This is bearish divergence, and that's a clean bearish divergence, okay? We got peak to peak. There's nothing coming and hitting it. There's nothing coming here. Also, there's nothing coming and hitting it. So that's a pretty clean divergence. And I was looking at that on the 65-minute chart the day before it gapped down. So what happened next day? So as I was talking to my on-air subscribers, that if it gaps down here, I am willing to go short. And I was actually waiting on this day to gap down. Right after a doji there, I was actually hoping that we are gonna have a gap down next day, which then create evening star reversal. We didn't get that. So what happened was the next day we had what it looks like bearish engulfing, and that's a weak bearish engulfing just because just a candle of that and the volume was weak. So but it was still there, the bearish sentiment there, and plus it was the location where it's happening, right? It was happening at that 50 EMA. So what happened was after bearish engulfing, we gapped down, and I was looking that 65-minute bearish divergence happening, and so I knew as soon as it was getting. I woke up early and I'm looking at Apple, and it was there was some pre-market sale going on, so I had my sell order or the put option buy order at market open. So as soon as the market opened, I got filled at market, and I was able to ride that, and I'm still holding all of my positions here. But Also, what I wanted you to see is that not only just 50 EMAs, also I wanted to look at 10, 20 EMAs. So what we are seeing here in 10, so basically this green is 20 EMA and that blue is 10 EMA, okay? So we had the initial cross there, and ever since then, it's almost like Apple's been cursed of 10 and 20 EMA, right? So every time it trades below, it goes below 10 and 20, it gets cursed. We got above 10 there, but we were not able to close above 20 EMA, and then bam, right? We got up above 10 and 20, but then when we closed below 10 and 20, bam, right? Same thing happened below 10 and 20, bam, right? Below 10 and 20, bam, right? Today we close below 10 and 20. So again, I cannot just sit here and tell you that we're gonna have another BAM action, right? We're going to 360 next a month, right? I'm just not gonna call things out like that just because, you know what I mean? Anything can happen in the market, but what do we work for? What do we work with? We work with probabilities. We work with chances. I gotta get into a trade that has a high probability of happening. So if it happened before, it continue to happen. It continues to happen like this. Every time below 10 and 20, we get that leg down. We get the intermediate bearish trend happening on this daily chart. So what are the chances that that could happen again? High. There's nothing 100% in the market. Anything can happen, right? We can have some kind of news coming out tomorrow. This thing could soar, but that's not what we're working with. I cannot work with just guesses and feelings, and I cannot just go long today saying that we're gonna go gap up tomorrow. That's just nonsense to me. If you trade that way, I'm sorry, but I don't know, statistically, people, you know, they basically talk about amateur traders and new starting traders, uninformed players, that statistically they did a, they researched on it, and they said after 6 months to 3 years that most of new traders and amateurs, uninformed traders, they empty their account. And it's one of the reasons is because of this reason, because we like to just jump in with the guesses, and I can't do that. I cannot do that. What I can do though, when I look at these patterns, that it happened before and it has a high chance of happening again, right? It has a high chance of happening again. Just like that one dude, every 50th day, I come to his house and I smack him. Next 50th day, he's gonna be waiting for me. Make sure I don't do that. Right? So that's what we're having. We close below 10 and 20 EMA, and psychologically, not everyone's watching 10 and 20 EMA, but psychologically they remember that we get to a certain point after, okay, we get up, we get an initial bullish move, and then we get hit. We get hit by the bears, and then we get pushed down, and we get to a certain level, which is 10 and 20, 10 and 20 there, and 10 and 20 there. Then it starts just really loses momentum below, we close below 10 and 20 there, and then we get another, intermediate trend happening there. I'm saying we have a high chance of that happening, right? There is one thing that I am looking at, because in any situation, it doesn't matter if companies going bankrupt, in any situation, there's always a legitimate argument for both sides. So let me give you possible bullish argument. Possible bullish argument is this: is that we're forming some kind of inverted head and shoulder here. But the thing about that is that's just me just speculating, because we don't have any kind of tangible evidence yet. We do have a tangible evidence of what? Tangible evidence of that 50 EMA acting as resistance. We have that possible what it looks like a breakaway gap. We have a tangible evidence that that being a bearish engulfing pattern. We have possible evidence that this is the 3 black crows, which it happened before. So we got 3 black crows here, 3 black crows there, and we had 3 black crows there. Okay, and so those are tangible evidence because price show it, right? Price show that evidence, and then we close below 10 and 20, right? So. And then we have an increasing selling pressure there, right? Increasing selling pressure. So then everything about this stuff or this analysis that I'm just giving it to you, it has so much evidence, so much tangible evidence that there's a bearish sentiment rolling in. However, what I'm about to propose to you is just a speculation because we don't have anything. Maybe it will change next week. Maybe we come here, we form a hammer, and then we have follow through, and we have some volume coming in, right? Then which means that we had left shoulder, head, and then right shoulder, right? Inverted head and shoulder, and then we break the neckline. Those are the neckline. I'm sure that at the level the 50 MA is gonna be traveling this way, right? The 50 MA, we break 50, we break the neckline, and then many times what happens after inverted head and shoulders, it could like to come back down and test that head and shoulder as as a new, in this case as new support, and then we get that support, it could thrust come back to maybe 500, maybe even 520 if we measure this move. But I can give you that analysis, but I cannot give you that analysis because we don't have that evidence yet. But there's possibility of that. There's a possibility of that. But that's just sheer speculation. There's no evidence whatsoever as far as the price is concerned, as far as the tape is concerned, right? Also, we have this gap here that was not filled. What I'm looking is a 432, 437 level as very strong level, very strong support level. We break that level. I believe this time we're going to break 420 and we're probably going to come back, test 420, and then we're probably going to 360, which is my ultimate target. And I'm not sure if we can get there before the earnings, but I believe if we break this, we fill this gap and break this support, break this possible right inverted head and shoulders right shoulder level, that's what's going on. That's what's going to happen. And I'll explain to you why I think that's going to happen. What's the definition of trend, right? What's the definition of a trend? Definition of trend is, definition of downtrend is making what? Lower highs and lower lows, right? And ever since here, that's what we've been doing, right? Lower high, lower low, lower high, lower low, lower high, or lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, and we made lower highs. But here's what I want you to look at the sentiment, okay? Every time we make the lower high, when it comes down, it breaks the previous support, right? When it comes up, it doesn't get up to where the recent lower high was. It comes down a little bit lower. That's why it creates lower high. And then when it comes back down, it breaks recent lower low support, right? So this is what happened. We got up, we never came back up here. Thus we created lower high, and we came back down. And if you look at this on line chart, you don't see it on this candles, it's hard to see. We broke below. We broke below lower low. We broke below that and went up. We never got up, back up to where the higher low was. What happens is we made yet another lower high, and when it comes back down, we break recent low, which means break support, and that's been happening. So here, if this was the lower high and this is a lower low, if bears are coming in, do you think they're gonna break 420? Yes. I can't say for sure because nothing is for sure in the stock market. Anything can happen. But again, I cannot work with guesses and feelings. What I can work with is probabilities. Do we have high chance that we're gonna break 420 and then make another lower low? Yeah. I just showed you. It happened every single time, this whole 6 months period of time. So there's high chance that's what's gonna happen. It may not. We might come back down here and we find support and then you could just go higher. But what are the chances of that happening? Not as high. Not as high. That's why I can work with probabilities, but what I cannot work with is just feelings, my guesses. right? Without anything to back it up. And I've just given you this past pattern and behavior that every time it makes lower high and lower lows, when it comes down from the lower high, it breaks the recent lower low, which was a support, and it creates another lower lows. And that's why they call it a downtrend. It's a trend. It's not just coming down. It creates a trend, right? So Apple looks bearish. I'm going to continue to ride it until it gives me definite signal of reversal. So until then, I am bearish, and I am hoping that we're going to break 420, and we're going to go to possibly come back and test, and then go to 360, which is my ultimate target. And I don't know when. You know what I mean? It could be next month or two. It could happen before the earnings, or it could even happen after. You know what I mean? But everything suggests what happened is that that's what's gonna happen. And so many people, and I don't understand why people think this way, is that just because I've been shorting Apple ever since 680 level that I hate Apple. Okay, so as a professional trader like myself, I don't trade equities, or underlying securities, I trade options, which means I trade both ways. I don't look at a stock and say, well, this must go up. I look at it, well, if this is going to go down, I'm going to ride it down. If this is going to go up, I'm going to ride it up. I don't have any favor to a stock. I don't love any stocks. To me, everything is same. Apple, IBM, Citibank, Bank of America, Gold, they're all same to me. They're just different patterns. They're different personalities. They're different sentiment. That's all. Just Apple has been the most profitable trade for me ever since October, of last year, and that's why I was able to, make more money late last year and this year because of Apple. And so then I'm going to continue to trade because it doesn't give me any reasons not to. It doesn't give me a reason to go higher. So that doesn't, you know what I mean? So it is preposterous to say that somehow that I'm Korean and I love Samsung and I hate Apple. That's just somebody who's just very ignorant to this business and not professional at all. Because I do have Apple products and I love Apple and I do believe that Apple is a good company, but good company doesn't mean anything to me. What it means is I'm only gonna follow where the market is gonna go. If market is going down, I'm gonna go there. If market is going up, that's where I'm going. I trade both ways, and I don't have a love for anything. Because that's my job. That's what I do. I'm here to make money. I'm not here to favoritize some stock and chit chat with you. Why did I love this stock so much? Why that Apple is a god of this world? Why this Apple is thousand? No, I'm not gonna do that. Because that's not what I'm here for. I'm here to make money. That's it. That's it. I'm here to make money, right? I don't care if I'm wrong. You know what I mean? Like, people mention things all day long. In Twitter, stock Twitch, in a blog. People mention things all day long, right? And what it gets to me is that those mentions, those analysis that you put on, it doesn't matter if you didn't profit from it. Some people talking about, well, I predicted it, I mentioned it, and it came true. That doesn't mean anything if you didn't profit from that analysis. If I wrote an article say, well, Apple's going to 360, and I didn't know how to trade it, I'm not a successful trader. I'm not a successful trader because doing an analysis and actually trading is a completely different ball game. I'm just telling you right now, straight up, that there are people out there everywhere that mentioning things all day long and they want to have your approval of some sort. They want to have a higher follower count, or they want to get your praise, or they want to be known as the guru or something. I don't care if you follow me or not. Don't follow me. Don't subscribe me on my blog, or I don't care, because my job is not to get a praise from you or get a follower count or increase. My goal is not to increase my follower count or to be known in this internet world. My job is to make money, and that's it. That's it. I don't care what people are gonna think. So that I'm gonna just express the way I see it, and if you like it, I'm glad. If you don't, find somewhere else to follow, find somebody else to hear. All right, you know, just a little rant there, but hopefully you guys understand where I'm coming from. You know, I do these videos for those of you who are humble enough to listen and maybe, you know, grab something out of it, and maybe hopefully there's been some kind of a, you know, maybe a signal to you, or warning signal, or maybe it helps you in your trading. I'm glad. I'm glad. I think in this business, that's very important, that willingness to learn and having that humble mindset, because you always think that you know what's going on. You know what I mean? End of the day, you look at your account and then you tell yourself, doesn't matter what other people say, doesn't matter how many follower count you have on your stock Twitter, doesn't matter how many people visit your blog, doesn't matter how many subscribers, it doesn't matter. Look at your account and you're not making consistent income, then you're not doing your job. You're not a trader. You're not a good trader. You are just, you know, doing this so that you could have some kind of publicity, or some kind of, you can obtain some kind of prominence. I'm going too long, right? That's what happens. Anyway, you guys have a great weekend, have a great Easter, and hopefully I'll talk to you guys next week. Again, hopefully this has been helpful to you, and well, talk to you later. Bye.